A confirmed news break by CNBC-TV18, Aster DM Healthcare has announced a merger with Care Hospitals. Vinnii is here with the details and what brokerages are making of this move. Vinnii.
Absolutely. So this is a very big positive news that's come in for Aster DM, and like we were saying also, this is an CNBC news break that is confirmed. So it's a good up move in the stock. Aster DM Healthcare and Quality Care India signed a definitive agreement, and this came in as a news on Friday afternoon post-market hours. Now, this merged entity will be among the top 3 hospital chains in the country, so they have a big scalability that comes in on that front, and gives them a furthermore opportunity to expand further greenfield options, brownfield options as well in terms of expansion in the central as well as south of India. This is a EPS accretive business for them. So yes, margins are also going to see an improvement coming in. Aster DM margins, what we expect for the merged entity is going to be at around 20-21%. So much better than what is the current Aster DM margin, as well as the return on capital employed is expected around 18%. Currently for Aster, it's at around 16%. So yes, the share swap that is there for every 1,000 shares of Quality Care, the shareholder will be getting 977 shares of that merged entity of Aster. So keep an eye out on that. Brokerages are also positive on this one. Axis has raised the target price to 575 rupees from previous 510, and Laura Capital maintaining their rating and a target price of 521 rupees per share.
When we look at our margins right now, EBITDA margins around 17%, it actually moves up to 19% in a post-merge scenario. So, which is why, exactly like you said, it's EPS accretive from day one. This merger, it values the entire deal at more than $5 billion. So we believe that this is one of the largest healthcare transactions this year. So we should be able to see the additional 10 to 15% EBITDA margin expansion, maybe in sort of 2 years. 24 months to 36 months is when you really start unlocking those synergistic opportunities, to be honest. Aster has been outperforming its peers, and we have been growing much faster than most of the peers in the industry. We expect at a combined level, we'll still be able to be close to 20% CAGR. I think what has happened also is since Blackstone has come in, there has been a lot of investments that they've been making in terms of infrastructure upgrade. So I think there's been a little bit of a delay in some of those investments paying off. But at a combined level, we expect that we should be able to do still a 18-20% revenue CAGR over the next couple of years.
The street giving a thumbs up to Aster DM. One, it expands their overall bed capacity to 10,150 beds, and the company said that they're planning to add another 3,500 beds in the next 3 years. So that's one. 2, Aster DM was geographically concentrated more in South India, and now with this merger, they also get big in Central India, particularly Gujarat. And the third thing is it also changes the profile of customers. So Aster DM was present more in oncology, but Care Hospitals was known for its cardiac facilities. So in terms of offerings, customer offerings, it also expands it quite significantly, and the street likes this. But